great question. So I was on the Canadian version of the Shark Tank television show. I've seen thousands of pitches, and what was really striking to me is how many companies were using equity to do things like buy Facebook and Google ads. In fact, today 40% of venture capital dollars go straight to Google and Facebook, which means that founders are spending the most expensive capital to do something that by definition should be repeatable and scalable. And so it was actually on the show 5 years ago that I started doing these revenue share deals. I said, look, instead of me giving you 100 grand for 25% of the company, why don't I give you the 100 grand? I'm not going to take any equity. What I want is 5% of your revenue until you pay me back $106,000. And that was the basis that Clearbanc was built. This isn't debt. There's no personal guarantees. There's no compounding interest. There's no fixed payment timelines. It's truly, if you take our capital to grow, you get a bigger business. We just get our 6%, and it's really, really grown. I mean, this year we'll invest over $1 billion into 2,000 different companies, big names like Lisa and Nantucket, Latote, Public Goods are all customers of ours. And so I think we've just found, some differentiation in the market for companies that don't want to give up equity but need that capital to grow.
Okay, so a lot of money. You mentioned $1 billion there, Michele. Where is the funding coming from to fund some of these startups?
Yeah, great question. So we actually just announced that we raised a new $300 million round ourselves. $50 million of that is equity that's coming into the company for us to expand into different verticals in different countries. And then $250 million of that is our fund. So we raise GPLP funds the same way that venture capitalists do. And those are backed by, some previous founders, like the founder of Seamless, anchored one of our funds because he totally understood the challenges that founders go through.
And so for some of the companies that you've invested in, tell us a little bit more about them. What enticed you to them?
Yeah, so what we're looking for is we're looking for companies that have positive unit economics. So that means that, if you're spending, like if you have a $50 product, you're spending $10 to make that product, $10 on ads, we can do that. The nice part is then we have built, AI and data science around that. And so we're making our investment decisions completely based on that data science. We're not, having a human-to-human interaction. The result of that has been, really groundbreaking. We've actually backed, 8 times more women than the venture capital industry average. Great companies like the ones that you can see here on the screen. And the other thing is that venture capital traditionally hasn't expanded very far. There's a great Bloomberg study that shows that 80% of the venture capital dollars last year were invested in 4 states in America: California, New York, Massachusetts, and Texas. When you compare that to Clearbanc, we've invested in companies in 43 different states in America. And so this data science has given us the advantage of taking a lot of the bias out of decision making and investing far more broadly.